Ross Gerber just sold a lot of Tesla stock, 30% of his Tesla shares in his ETF, although we also do have a lot of great news today for Tesla stock. We'll go through everything. Alexandra is calling out Ross Gerber. Ross earlier said that he does not sell and will not sell Tesla stock. This is what Ross said when he was running for the board. And here's someone also pointing it out that Ross would have had an obvious conflict of interest if he was on the board of directors. And Ross responded to this tweet and said, I have owned Tesla stock for 8 years and I'm not selling. In fact, we continue to buy more shares. I only care about long-term performance. I will not sell my Tesla stock. Imagine if Ross was on the Tesla board now and he sells 30% of his holdings. How would that not be a conflict of interest? And by the way, Ross can do anything that he likes to do with his Tesla stock. It is his money. I'm not criticizing that part. Although I do believe that in the long term, selling Tesla stock will hurt Ross's performance as a fund manager, just like it did when he sold Tesla stock before it 10x.
We kind of covered it last time a little bit.
You can't actually be on a board of directors of a company you don't own. Like, the whole purpose is that the board of directors is supposed to be representative of the owners of the company. There's no conflict in that. We're owners of the company and we want representation.
I like that overall Ross is a Tesla stock bull, but I also like that he's not on the board because this would have been a clear conflict of interest. If he thought that Tesla stock was about to go down and then he didn't end up selling Tesla stock, he would be doing a disservice to his clients. But then on the other hand, if he does sell, especially 30% of his holdings, that would certainly look like insider trading, especially if a stock actually ends up going down. There would be no good way out of this. You could make an argument that because Ross would have been on the board, he would not have sold because he would have influenced Tesla to, let's say, advertise. But I don't think anything would have been different because it's only one guy and there are many people on the board. His influence would have been very limited. And now let's go through the rest of the Tesla stock news. Tesla is slaying it in China. We still have a whole week to go, and already the first month is better in China than any previous first month ever. These numbers are all based on insurance data, so good news, we did not lose the insurance data. There has been some talking about potentially not having this data anymore, but we do, so that's great. And we can see that clearly we are quite ahead of last quarter. Although, do remember that in January, we did have the Chinese New Year. So naturally, this month is going to be a little bit better, but it is looking quite a bit better. If this trend continues, we will have another record quarter in China. Looking at Europe as well, it's looking good with Giga Berlin scaling. With Delivery Way, well, it looks like it's already the end of a quarter. I mean, look at these deliveries. This is just the first month. Of course, it's Norway. It's a small country. Data, though, is looking good so far. Lower exports from China, higher deliveries within China, and higher production in Giga Berlin will lower logistics costs. That is good. This is the first time ever where deliveries in Norway in the first month actually were of some significance compared to the whole quarter. Tesla also just announced that they will be increasing their capital spending by about $1 billion. Some won't like this because they will say, oh, Tesla is just wasting money. But I say, spend more. Spend as much money as you need and spend it as fast as you can and scale as fast as possible. Morgan Stanley has a new research note. Will legacy OEMs blink on EV growth? The Ford CEO Jim Farley just said price wars are breaking out everywhere. Well, Tesla started it really. Who is going to blink for growth? Meaning, who is going to concede and raise prices so that they don't go bankrupt? How long can they lose money? With few exceptions, we expect the EV programs of a large OEMs to remain loss-making for years to come, although there's one big exception, with GM actually. We're gonna go through that in a moment, you'll be surprised. And this was prior to Tesla's price cuts. We forecast Ford's EV business to remain in an adjusted EBIT loss position through 2026 with long-term margins of just 3.2%. Roughly half of our margins of the ICE franchise. For GM though, Morgan Stanley says, we also don't expect their EV business to achieve a positive profit before 2027. So what do I mean that in GM's case, it is not really perhaps going to be that big of a problem? Well, here's a screenshot from 2015. This is a Tesla killer. GM is about to unveil a long-range electric car. And then in 2018, it was actually crushing the Tesla Model 3. But the problem is that GM is about to end the production of the Chevy Bolt, its first mass market EV, later this year. And the logic goes, if you stop selling EVs, then you won't lose any money selling EVs. And that is a pretty sound logic. You gotta give it to GM. GM says that, well, this vehicle has this old battery technology, so yeah, they're just not gonna make this vehicle for now. James thinks it's actually a good move by GM because, you know, the technology sucks. You don't see Tesla discontinuing the Model 3 saying, oh yeah, we are discontinuing it because we are working on the next generation vehicle. Meanwhile, Tesla is making way for improvements and potentially new manufacturing space at the space-confined Fremont factory, new filings reveal, where, you know, Tesla is making Model 3s and Model Ys and Model S's and X's, which Tesla is not going to discontinue making just because they will make the next generation vehicle. Lucid moves forward with the Gravity SUV testing on public roads, maybe because the gravity towards bankruptcy is stronger than ever. So I like the name of this SUV. Very symbolic. Today, GM posted its quarterly results, and we learned that Tesla made $118 million more than GM in net income in the quarter, despite generating 42% less revenue. Of course, the total profit that GM is making is quite respectable, but maybe GM will cancel more vehicles in the future, therefore failing to transition to the EV industry quickly. Tesla has announced today that it is opening its supercharger network in the Chinese mainland to other EV brands on a pilot basis. We also just learned the failure rate of a Megapacks, and it is pretty low, 0.001%. Here's how the Tesla Model Y compares to other SUVs in terms of efficiency, which is extremely important, and yeah, other automakers are not coming even close. Look at this Audi e-tron. This is pathetic. And I also saw some people confused on Twitter today, and they thought that Tesla now has the Model Y rear-wheel drive version available in the US. Sawyer just simply made a mistake here. Actually, Tesla still only has the all-wheel drive version in the US. The rear-wheel drive version is only in Canada for the Model Y. But still, the point remains that the Tesla Model Y now costs $750 less than the average amount paid for a car or truck in the US. And looking at the previous history, the difference between the median and the average price should be probably pretty small. So it's probably safe to say that the median price is pretty close to the average price. If anyone has data for the median price for 2022, please leave a comment down below. The next Fed interest rate decision is going to be made in about 1 week, and probably the interest rates are going to be increased even further. This is something that many retail stock investors are not aware of. Gas savings and tax credits make a big difference, but for many, it doesn't help them afford the car. Loan approval isn't based on long-term cost of ownership, but upfront costs, and many people won't have enough tax liability to qualify for the full $7,500. Still much work to do. The part that many don't know is next year, these tax credits are going to be applied at the point of sale. So you won't need to wait for a whole year and hope that you are actually going to get that $7,500 credit. No, you'll get it immediately at the point of sale. And just under that post, the first reply is from Ruben saying, I would absolutely buy one if Tesla absorbed the incentives and gave us the discounted price at the point of sale. This would lower the monthly payment and the interest. And this, of course, is a huge step for GM, specifically for GM's Cruise. Well, folks, we did it. I have been waiting for this day for almost 10 years. I am proud to announce that Cruise is now running 24/7 across all of San Francisco. This is a pivotal moment for our business. Except that is just not true. And while they might think that they are making a fully self-driving car, they are really just making a car that can fully drive itself in San Francisco with HD maps. Expansion is going to be very difficult and slow, and it's going to be very clunky. And this video explains why the Tesla board members are not buying more Tesla stock. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.